Well, good afternoon, everybody. Hope you're having a fantastic day. Let me go ahead and make sure you all can hear me as we transition over to the show here today. If you would go ahead in the chat box and put in the number 1 to let me know that you can, I would greatly appreciate it. All right, looks like we're transitioning over now. There we go. Excellent, excellent, excellent. Well, I want to start off today by looking at the S&P 500. Makes sense with what's going on right now. Let's take a quick look. And I'm going to bring it in a little bit. We got out of this blue zone, which is the 4181 black line, 4191, 4200 level. We finally got out of there yesterday. I called it for a bounce off of that blue zone. We didn't get the bounce. We gapped up and pulled back a little bit, which is okay. I'm happy with that. But we still have this 4237 level ahead of us. That's where we've got a lot of resistance of the all-time highs, 2 days in a row, closing highs coming in there on one of the days, opening highs. I mean, there's a lot of resistance in that area right now that we've got to contend with. The nice thing is we've got enough room for some really sweet trades over the beginning of the week. You know, one of the things that you want to be concerned of, or not concerned, but think about is, in general, it's not an always, it's not a given. In general, when you have a 3-day weekend, hence we're here, Monday we're off, right? Markets are closed. When you have a 3-day weekend, that Tuesday tends to be a bullish day. Not always, you know, news coming out obviously could drive it bearish, but just people are happy after that long weekend. So keep that in mind going forward. Also, we're going to talk today about, should I be buying options or selling options, particularly today? And I'm talking about the next 2 hours, what you're going to want to consider to do. And what you really need to take notice, take an understanding of is what happens with an option when you buy and or sell that option. What happens to it and what is the concern? So if we go ahead and look at, let's go look at Apple just for kicks and giggles, okay? Apple is usually a fairly valued option. Now, we've got options that expire this week, today, and if I'm day trading, I'm definitely looking to trade that. I probably don't need all of those on Apple. I'm definitely looking to day trade this option from today if I were looking to day trade Apple. I'm not going to carry it next week. But if I go into next week's options, notice, you know, the 4th of June is when it expires, and yet on the 31st, the market's closed. You got the 1st, 2nd, 3rd, 4th. You have 4 days. Well, what happens? With an option, whether you buy options or sell options, really doesn't matter. Buyer or seller, you see what is called time value deterioration. Time value deterioration. And that is of the time value, or what's known as the extrinsic value. Stick with time value. I know the gurus in options like to hear the right terminology. Time value works for me. Time value deterioration. Well, that deterioration happens every day. It's not just trading days. It's every single day. Well, normally market closes at 4 o'clock on a Friday. We get deterioration from Friday afternoon to Saturday afternoon. There's a full day. Saturday afternoon to Sunday afternoon. There's another full day. Sunday afternoon till Monday morning. There's 3/4 of a day. Well, what happens today? Friday to Saturday, Saturday to Sunday, Sunday to Monday, Monday into Tuesday morning. Now we're at 3 3/4 days. So you are getting a bonus as a seller this week. We're done here today. I go nowhere for the next hour. I will be at my computer looking at what possible trades I could be setting up for next week. So I'll be doing a lot of my covered call naked put analysis today, trying to capitalize on the extra days time value deterioration. And the way that you can do a quick number in your head, it's not exact, but you'll be close. A quick number in your head is this. If you look, and you can't see the full word because of how much I have on my, actually you can't see it all. It's called Theta, Theta, Theta. Theta starts with T. T stands for time value deterioration. T for time, Theta, T for time. Remember it that way. At least that's how I did it. This shows if I were buying an Apple, and let me grab a drawing tool here. I meant to start this little thing. We're not really recording. I'm just going to stop it and hit pause. Now I can at least grab a drawing tool on this screen. So if I'm looking here for next week, I would be looking for a delta between 65 and 85. So let's get a different color. Let's go with a cyan. It'll stick out a bit better. So right in here would be the two call options, assuming I was bullish, of course. It would be one of those two call options that I would be looking for. So either one of these, it has a time value deterioration of either 6 cents or 7 cents. That is Theta. That's our Theta column, right? Either 6 or 7 cents. What that means is if we have an option, if we were selling an option, let's say a covered call or a naked put, and every day 7 cents goes by, that means 25, 28 cents come Tuesday is going to disappear off of the price that's there right now. Right? Powerful when you really understand what happens in the background with these options. And there's a lot more to it than what the average person will tell you is, well, it's just delta is important. Don't worry about anything else. No, delta is a guide, and that's all it is. Theta, gamma, understand. I don't use rho, except that, rho is my wife. Other than that, I don't have any need for it in the options world because rho is the cost of borrowing money. We don't have any cost to borrow money. They're almost paying you to borrow money right now. And in some countries they do. So now this is an Apple. What happens if we take a look at, I don't know, some wacky, crazy, nutty company right now, like GameStop? Whoa, GameStop. Yes. What in the world happened? I don't know. Someone woke up and said, it's time to drive that sucker back up through the roof again. No rhyme, no reason. Boom, boom. 2 days in a row, we jack it up there at the beginning of the week. And we've given a lot back today. Not surprising with as much as we've made on it this week. But if we look at the options now, actually 30 will not be enough. I'll need all the options. I'm not going to look at the ones for this week. But let's look at next week. Let's say that I am bullish on GameStop. And if we look, let's go here. Let's go here, right? We're bullish on GameStop. See, yes, we are bullish, baby. Look at that move. I am bullish. That 230 level is a major Fibonacci support level, major. Earnings are coming out. Sometimes it's probably not confirmed yet, but, third week of June, the 23rd, we've got plenty of time out there. My moving average is sitting at 214. So I've got and then there's a confluence of the 21, the green line, and the 193 half level. Beautiful, right? Well, what if I went ahead and said, how much can I get for an option maybe down here at 120, 140, somewhere around there? Let's go look at what we can do. Why am I picking those numbers? Just to say, well, look, the lowest we've gotten here in the last little bit is about 140. So let's go over here and take a look at what could happen. So if we look at the 140 options, let me grab a pen again. And we're on the put side because we're going to sell naked puts. Right? If I look at the 140 put, it has a delta of -2. Notice all the deltas on the put side are negative or zero, but they're all negative. All that does is tell you it's a put. That's all it means. Don't worry about the negative part. I mean, you're not seeing something wrong. That delta tells me two things. One, it says for every dollar the stock moves, the option moves 2 cents. That's number one. Okay. And it is also a calculator that helps me understand what's the probability come expiration day that this 140 put has cash or intrinsic value behind it on this 140 put. There's a 2% chance that this position goes against me. 2. Now, could the world come to an end and GameStop comes crashing down? Yes, of course. Of course. But that's happened on numerous companies over the course of history, that they out of nowhere, Enron. And if you don't know what I'm talking about, somebody that are too young going, and who? Enron. Go look at them, right? Went down from however high they were down to like $2 overnight and then went bankrupt, right? 7th largest company in the world, I think they were at the time. Could it happen? Yes. They call it trading, not winning. Just get used to that. Be prepared for it. But on this position, I have a 2% chance of being wrong. And they're going to pay me right now 46 cents a share. So I take on an obligation to buy the stock at $140, which is basically about $100 less than it's trading right now. You do one contract, they pay you $46. You do 10 contracts, you're getting $460. But Rob, that's not a lot of money. Well, it is when you don't do a whole lot for it. I sold on Monday. I didn't sell GameStop. I sold AMC on Monday. Today, I sold GameStop and AMC. And if you guys remember, when we first started the options show, the Options Explained show, we talked about this where I was doing naked puts every single week on GameStop. But I was doing much lower strike prices. I was down at like the $40 strike, which was awesome. We were all the way down here. And for a week, we were getting 20 cents while it's trading at 150 and 200. Now we're at 140, and we're picking up what is in essence 47, 49 cents, 48 cents, somewhere around there. Somewhere between 47 and 49 cents is what you're going to get for that position, right? Great premium, great opportunity in there. Let's see. Hey, Andre, how you doing? Brandy, good that you made it. AMC puts. Yeah, we're going to look at that. What's the DD? We'll look at the puts on AMC in a minute. Good, Cameron. Glad it makes sense. These were done in a funded account, Cusco. I'm sharing with you a non-funded account, but they're done in a funded account. Let's see. Hertz Scrambler said, sold the Apple May 28, 21, 125 call today. Lost 140 because it got greedy during the week. Okay. Okay. We'll look at some companies in a moment, Green Positive. I want to go through a couple of them that I've got here. So there you have it with GameStop. So should we buy GameStop or sell GameStop? Remember, you've got time value deterioration. So let's check Theta. Get used to that, guys and gals. We're doing the 140s. We're going to take in 47 cents. We're going to see it says 21 cents. Can't be accurate. Impossible. Because in 2 days, there's no value left to it at all. Right? But you are going to have a decent time value deterioration. Probably 7, 8, 9 cents a day is going to deteriorate on this option. Right? You're looking at this option on Tuesday. If GameStop closed today at 234.71, opens Tuesday at 234.71, what happens? The value of the option is going to drop from 47 cents to maybe 25 or 30 cents. Assuming nothing crazy happened with news that's causing a change in volatility. If it doesn't, you've got a great opportunity there to just get back out of the position on Tuesday if you wanted to and call it a day. Close your position out. You're selling to open. How do you exit? The opposite. You buy to close. All right. So let me clear this off. All right. So those two right there are my favorite right now as far as selling calls go and or puts. I love them. They're getting jacked up again. Guys, what's going to happen? Listen, New York Bets, Reddit, right, are driving GameStop. They're driving AMC up. But when it goes back down, where is it going to? Is it going to drop all the way down here to $40 or $50? No, it's going to go back to where it came from. It's going to go back to that 150, 170-ish range. Somewhere in that area is where it's going to go to next. And if it does, okay, no harm, no foul. I'm really not too concerned with it. Why? Because I am all the way down here at 140. I got plenty of room to go. Almost 100 points of protection. My dogs want to kill the Amazon driver. If you're an Amazon driver, do not come here. Well, actually, one of them throws the package and runs when he gets to our house. No picture taken at our house. Hertz Scrambler said, next week you're losing a day. Probably better to wait till next Tuesday for options. Well, you mean as a buyer, there's definitely a benefit of waiting unless you anticipate a continuation move from the happy factor over the weekend. But yes, as a buyer, by waiting now with the extra day, you're better served. Folks here, let's look at an option chain real quick for this. Let's get rid of all these options. We don't know these, right? And let's close this up. If I am a buyer right now, the minimum that I'm looking at, if I were buying today, would be this 35 days. So July 2nd. That's the minimum. If I am, and that's as a swing trader, not as a buyer, but as a swing trader. If I am looking to day trade, I am looking for always as short of time as possible. 3:50 p.m. is the latest funded trade that I have ever put in on a Friday. It expired 10 minutes from where I did. It was on Apple. It was a very specific trade setup on Apple where we capitalize on massive movement later in the day with an options theorem called pinning, which we'll talk about one day. All right, let's see. Okay. So make sure that the option that you're choosing fits the risk profile that you have for that trade. In other words, if I am holding overnight, I am not buying a weekly option, period. Time value deterioration is too quick. Remember, if you have an option that has $1 of time value in it and there's a week left, that entire dollar has to disappear in a week. So when you look at a curve, when you look at how a time value deterioration curve works, right? If you are, let's say this is today, and this is expiration over here. And actually, let's not worry about today. Let's worry about 120 days. Oh boy, that's nice and straight. 90 days, 60 days. By the time I did the fifth one, I finally got it fairly straight. 30 days, right? And if I change color over on this, get something red. Here's time value deterioration in that first 30 days. If you bought the option 120 days out. Second 30 days picks up a little bit by the time you get to 60 days. By the time you get to 30 days left, you've had a much larger drift. By the time you get to expiration, that's what it looks like in the last 30 days, right? So now look what happens. Look how quick things have to move in the last 5 or 7 days for that last week to get to expiration. All that time value has to compress down into that last few days and drops off very quickly to the point that the Black-Scholes model is not even very accurate that far or that close to an expiration period. Meaning you're going to get options data like the 47-cent option that has a 20 cents Theta on it on GameStop. It's impossible. That would mean in 2 days there would be no cash value left to it. But because the closer you get to expiration, the higher that number becomes, right? That number gets jacked up inside of there. So you've got to fit the trade to the expiration. Well, I plan on getting out today, day trade, short of option as possible. I'm going to hold even 1 day by 30 days of time because the time value deterioration is extremely small in that overnight factor. But it costs more money. Well, you need more money to do the trade, but it's not that it's costing more unless you're wrong in the trade, then and you let it go. In other words, you buy an option and you watch, and it was $10, and then it's $8, and then it's $5, and then it's $3, and then it's $1, and then you say, boy, it would have been nice if I got out at $9, right? Yes, then there's a problem. But that's not a problem of the options. That's a problem of your risk profile and what you're willing to accept and do, right? You need to be, the bulldog in the fight. You've got to be out there saying, man, whatever it takes, I'm going to do what I need to do because this is my money. Do you really want to give away $5 and $8 grand, $2 grand, $50? It doesn't matter. I will fight like a dog, a junkyard dog, for every penny that's in my portfolio. I grew up with nothing when my parents divorced. I know what it is to fight my way through for everything I've ever wanted in life. Everything. Right? I am not the person that squanders money ever. We don't buy the fancy cars. Do we live a comfortable life? Yeah. Do we have some money put away for retirement? Absolutely. Am I worried about retirement? Heck no. Am I going to ever have to retire? I won't teach anymore at some point, but why would I stop trading? For what purpose? As long as I've got a brain, I'm going to keep trading the market. Covered calls, naked puts, diagonal spreads, iron condors. Iron condors can become your car payment, folks. Credit spreads can become a car payment, right? Rent, mortgage, you can use the market to take care of these types of expenses. Blaze said AMC is going to lift off. Possibly. 28.5 Planetar awarded a $111 million contract to provide mission command platform to the U.S. Special Forces. The Thinker. Hey, cool. Thank you. I appreciate that. Not sure green positive. I have not traded them. Great content as always. Ermin, just as an FYI, and for all of you, we've got a good amount of you in here. The options show there will be none next week at all because of a conference that's going on. But this show will be moving to Thursday mornings at 9:30 a.m. Every Thursday starting on the 10th. All right. So that is when you will see me next is the 10th at 9:30, 9:25. I'll be in a few minutes before the market opens so we can kind of look at what's happening in the market and get some insight on where we're going to next. All right. Very cool. So let's see. Green positive. You had a. Yep. Appreciate you guys dropping that in there. Just looking for who you were asking me to take a look at. ITT. All right. Let's go look at ITT. And guys, remember, I want to relate everything we do back to options. So what would I be doing here? My bias is off a little bit on this. My moving averages are in the wrong order, so I'm not overly excited about it, but the potential is there for a bullish bias. It's right now, the pink is the 8 moving average. It should be above the green, just like it was here and had been for so long, right? We got that crossover on the gap down, right? That there was earnings. That's where the catalyst kind of started. We got that gap down, and we haven't been able to get back above on a close and or see the 8 cross back up through the 21. But if you were looking at this position, I would be looking to be bullish. Let's see. My Fibonacci would be right there. There's my fibs. Let's do it this way. All right, so ITT moves $4 is our Fibit. 94 to 96. We're good there. 96. Okay, so I don't need to split any level. So all of the lines are good where they are right now. I don't need to make any adjustments to them is all I'm trying to check right now. So if I were bullish, I'd be looking at 98.62 as our resistance. I would probably have my target set at 96 bucks. Maybe 96 and a quarter, but knowing me, it would be 96 bucks. That would be my target. I would want to retest at that 93.75 and a bounce before I would take the entry into the trade. And what are we looking at there for ITT? Let's go to an option chain. All right. First problem for me is they do not have weekly options. Everything is in white, which means it's a monthly option, right? Where we came from with a GameStop or an Apple or something like that. Watch, we'll go back and look, and you see the yellow, and they have weekly next to them. I want to see weekly options. That doesn't mean you can't trade it. I'm not a fan of spending extra money to day trade it, as an example, if that were the case, by having to buy those very long-term options in comparison. But I would be buying the June option right now. I do not have any open interest here. I want to see at least 100. I don't see anything there. Let's go look at October, see if that's any better. Not really. Let's go look at January of next year of 22. I have nothing. So I'd be a little cautious here. Basically, look what happened. See, in January, you are basically going to a party and you are the only one at the party. They call that a pity party. All right. If you go to get out of your position and market maker decides to fool around with that bid-ask spread, you have no choice. There's no one else out there to buy it except the market maker. You're going to dance with the devil. So be very careful with that. Now, if you know a company and you trade it and you understand it, I'm not a fan of no open interest at all. But if you had a lower open interest and you know that company, how they trade and so forth, and you feel confident with them, great. Like I am very confident with trading CMG with lower open interest. We're trading Booking with lower open interest. Yeah, huge bid-ask spreads, right? But I'm very comfortable with those companies. If I don't know I don't know ITT. If I don't know them, I would not trade this one personally, because even if I went here and said, all right, let's go, we got 94 delta, that a little high, but we got 10 open interest, or we got 19 here. I don't know the company, so I would stay away from it. Okay. All right, AV guy. Looking to sell some covered calls on TEL. What do you think? Well, I don't know, Herd Scramble. I can't tell you. No, I'm kidding. Okay, let's go look. TEL. Got to have fun. All right. I know nothing about what drove this company up. This is oil, all right, oil and gas. So it's energy related. I know nothing about why this has happened, right? Is it a new product? Is it going to stay forever? Is it being bolstered on Reddit? I'm not sure. Let's go look at a real big picture. Oy vey. Okay. So apparently you own the stock. First thing, who was that said it? Herd Scramble. First thing is, be careful. If this news is here to stay, be very careful that this does not become something that, like a GameStop, that just skyrockets and your stock gets taken away from you. That's a consideration you're going to have to contend with if you choose to write covered calls on this, right? The first thing that I see, and the thing that I tell my students all the time, is look left. What do you see? I see right up in here that I've got some resistance in here, somewhere between these two zones, these two areas right here. Come on, baby. Snap. There we go. Somewhere between those 2 points, I've got resistance up in there. What does that mean? We're there now. Yes, we've got an hour and a half left in the market. We're above that upper level, but you do realize that end of day, we could slip back down below there, right? So caution is all I would tell you from that, right? Up or down, I don't know what's driving the company behind it. But if we look at the options behind it, let's see. Lower price stocks like this, sometimes it's hard to get a decent covered call, but let's see what we can do. Oh, I never sell more than 30 days. So I would have to go. And for me, it's really more of weekly options than monthlies ever. So we would have to go and sell. The way we do it is this. Covered call, we're looking for a delta of about 40 or less. 42 just kind of pushes the envelope a little bit. A little more delta than I'd like to have. I'm taking on almost a 50-50 risk in this trade of it taken away versus not taken away. If I don't care, by all means, take it from me, then I would do the 4.5 without a doubt. If I didn't care, by all means, I've got a delta there of 52. It's a coin flip, and there's a very good chance it gets taken away from me. I'm okay if I don't care. For me, if I were trading it, I would be going with the 5.5s, and I would be looking to pick up about 30 cents, which is the midpoint of the bid and the ask. That's how I would put it in. But you've got to be on hold, on the hook for 21 days. It's a long time to be holding on after a move like this. It's a long time. So I hope that helped. Let's see. Okay, let's see. Back to watch. All right, got that. Oh, wait, I saw another one in there. So Seniat said SPCE. Let's take a look. SPCE. So it is a bullish bias. It's not true bull, but it is bullish. My ADX is at 58.71. Man, we're rocking. It says taking a directional trade. My DMI plus says take the directional trade bullish. I don't have any pullback. I would love to see some pullback before taking the trade. It's really rocked. So a little bit aggressive for me to take the entry. You know, I'm going to close this down a little bit. Let's do it this way. Let's do that. Okay. A little bit aggressive for me, but let's take a look. If you were bullish on this, I mean, listen, we've been up at that $60 back in February. So it's not like we can't get back to it again. So if you're bullish on SPCE, let's see. Oh no, what happened? Is it not optionable? Let's try one more time. So TradeStation's not showing any options on it at all. Or if it is, I don't know what these are the options on because it's not showing me anything here. So don't know. What's up with Apple? AV guy, it's the lawsuit, man. They're just in a world of hurt right now. Matthew said, buy HPQ now. It actually had a great earnings report yesterday. No reason to sell off. There's always a reason. Let's do it from a technical standpoint instead of it feels like it's going to go up. Let's look at it from that way. HPQ. Sometimes it's not the earnings report, it's the forward-looking statement. We met our earnings, but we think the next 3 quarters are going to stink. Right? Or the next quarter is going to stink. So I am not. Here's the thing. If you look at this and say, there's no reason to go down, I should buy it. I'm all for you. If you are a strong believer there, Great. You may have some insider information, and I don't mean illegal information, but you may have knowledge of the industry that I don't. But here's what I want you to think about. Let's say you're willing to take a $500 risk on this trade. I want you to tell me, in all honesty, that you're willing to go to the top of a mountain with $500 and $20 bills in your fingertips, and you're willing to let it go, and you're okay with that, then go ahead and trade HPQ. If that's not the case, you might want to think twice. And I'm trying to burst your bubble, guys. I'm trying to make this real. Listen, unless you're doing this for fun and you're just trying to learn stuff and, because you like to learn, that's great. I love learning. I love making money a lot more. I do this to make money. I don't do this. I don't trade to learn. I trade to make money, right? I'm not looking to take a hard lesson if I don't have to. Let's see. So Nina's no, it wasn't Nina. No, it wasn't. Bugsy said, "What's the rule for picking open interest and implied volatility?" I don't use implied vols in my decision making on the option. If I think if the stock is too volatile, GameStop as an example, it doesn't matter what the options are. The open interest, the rules are this. I want a delta of 65 to 85. I want at least 30 days of time. I want earnings to not be coming within that 30-day period. And I want my open interest to be 100 or greater. That's the rules of what we need. So no earnings for the next 30 days. The option at least 30 days out in time, assuming it's a swing trade. The option at least 30 days out in time. Have a delta of 65 to 85 and an open interest of at least 100. If I can get that, we're golden. That's what I need. Let's see. Would you look at Tesla? Stuck with 100 shares since long time, like the company, but afraid more downside. How would you overcome the situation? All right, so let's take a look at Tesla. Oh, that is not Tesla. Tesla ends in an A, not a Z. So Tesla's looking ugly. It is right now in a neutral bias, which for me means nothing more than day trade. That's all I would be willing to do for it, is take a day trade on it. With that being said, you've got to make a decision as a trader of what you see happening. Elon Musk is probably the most whacked out CEO, owner, whatever you want to call him, in the world. Eccentric, squared by 400 million. That's eccentric. That's him. The stuff that comes out of his mouth, smoking weed with whoever he is on TV and podcasts, and good for him. Do what you got to do. I don't care. But every time he opens his mouth up, you never know what's going to happen. We're taking Bitcoin. We're not taking Bitcoin. We should go after Dogecoin. Let's go do Saturday Night Live and quasi talk about Dogecoin. Let's talk a little about Ethereum. And let's talk about space flight and flying cars. And all this is great. Tesla is at the mercy of him without good news behind the stock saying go up. So, my last time I went in for an appointment with my cardiologist, he said, "Rob, you'd be proud of me. I bought more Tesla." I said, "Okay." And Tesla had been in this downturn, took a little bit of a bounce right about in here, I think it was. Took a little bit of a bounce, and that's what he did. He picked it up on the bounce, watched this retracement, and he goes, "Oh, higher lows. Good." And then it continued to climb, and then we're right back to where we were with that now double bottom pattern, setting up back off of these lows back here just a couple months ago in early March. To me, there's nothing about Tesla that says it's ready to go up. When is Tesla ready to go up? July 26th. Why? 3 months from when the earnings came out. That's what you need, is something like the earnings to give it the catalyst or some form of news, right? Writing covered calls on it is risk, because if Tesla takes off, and it can, if Tesla takes off, you're caught on the wrong side of it. You'll get the stock taken away from you. So caution, grasshopper, with that one. All right. Oh, where'd that go? Hold on. Albert said, think of selling a covered call and buy a put with the money, but implied volatility is low. Well, what makes the implied volatility low? Just in general. Watch, here it is. Here's the magic symbol, $ VIX. Where's the VIX? $16. Guys, get over it. You're not going to have big premiums, which is bad as a seller, good as a buyer, because the call price or your long put and call options have come down in price also. Right? So this is why the implied volatilities are where they are. Brad said, I know you trade the SPY, but do you ever trade SPX with spreads, or is it just too rich? Oh, no, Brad, I've got one of the coaches that teach for me for wealthbuildershq.com is a CMT, chartered market technician. He basically has a PhD in technical analysis. He's taught my inner circle, which is our highest level coaching students. He taught them his spread on SPX and crushes it. It's a great setup. I like it a lot. I do more iron condors on it than I do the directional. I do iron condors on the RUT. I do them on the SPX. I like them better on the RUT than I do on SPX. The RUT has a very small percentage of ownership as the top companies in there, where the S&P 500 is a little bit higher, quite a bit higher than what is on the Russell. S&P 500, Russell 2000 stocks making up that index. Let's see. Smash the like button. There you go. I love it. Diamonds or RUT? Oh, definitely RUT. I'm not a diamond fan, but I'll trade the Qs before the diamonds any day. And now, what's the big advantage to the Qs? What have they recently done? Da, 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 da. Da. Look at how many expirations. 4 days, 5 days, 7 days, 10 days, 3 times a week. We have an expiration on the Qs as we do on SPY. Absolutely love it. I have one of my students that trades hundreds of contracts of the Qs every day. And she is absolutely in love that they've made the adjustment to these shorter strike prices, expiration dates rather, for that exact reason. Let's see. Senate, you're welcome. Bugsy said ATER. See? All right. Same scenario, guys. We're catching the falling piano here. If I stand up, you won't see me do it, so I'll just back up. Right? You're walking down the block. You get a little echo here. You're walking down the block. Big building. You're in Manhattan. You realize they're hoisting up a piano, and you see the rope break. You're a good person. You want to help out. So what do? You brace to catch it. Yeah. Bad move. Okay? Let it hit the ground. Get out of the way. Let it hit the ground. Pick the pieces up later. Let it hit the ground. Pick the pieces up later. I don't have a clear signal yet that says we've gone to bullish. We're in what I call a neutral bias. We're above the 21 moving average, the green below the 55. I don't take these as directional trades. I just don't do it, folks. Are there others that do? Yes. Could I make a lot of money if I was right? Absolutely, we could crush it. I do okay. I don't need to chase trades that may work out for me. Watch. I showed this. I had taught early this week. What did I do? Aaron called me, I think it was Tuesday, right? So here, we just closed up. Let's see. We had a trade go against us on Alibaba, cost us $936. We had Tesla, bearish trade go against us. It cost us $3,900. We're still in a bullish trade on United Healthcare, right? I've got to check on today's numbers yet. I didn't look to see if we got filled on this or not. For any targets and or exits. But guys, we're up $488,000 this year, right? So now that was on 156 trades, right? But I guarantee you there's another 156 I never took. And for me, again, folks, this is not me being cocky or telling you how to trade. You like this stock, you like this pattern, you got this figured out, trade it. Trade it. Trade it. I have zero issues with that whatsoever. For me, I know my risk profile. I know my risk tolerance. I know where I get in trouble. These types of trades where I get in trouble because I let my gut tell me how to trade instead of here. Right? I want to make sure that I'm focused on what the chart tells me and only trade what the chart tells me, not what my gut tells me to do. And when I first started, I was pretty bad with letting my gut dictate what to do. Let's see. Man, this thing moves so fast sometimes. All right. Trend Clothing is asking for AEI. Nothing. I mean, again, it's that gamble. You know, if you're willing to let the $500 go, great. But I don't even know if we have options on it. We'll check. Nope. No options. Let's see. Tetris, Fire, Nvidia. Love them, by the way. Absolutely in love with them as a company. Oh, yes. All right, their earnings were the 26th. Today's 8. Very nice. What a move. And listen, I'm not tooting my own horn, but you saw that last candle just pop in and look where it went to. Right to the 648.57, the line we've got drawn from back here on April 15th. And it just hit that line today. Right? Very powerful lines. It's a little tough to try to do anything on it with it as bullish it is right now. Could you have caught something earlier in the day in a bounce? Absolutely. I look to trade Nvidia almost daily. Try to. A lot of day trades. Tremendous amount of day trades on Nvidia. Let's see. You're looking at an option for next week. You're looking at about 16 and a quarter. About 16.25 is your cost. 16 and a quarter to 18 bucks is your cost for the option. Right? Just depends what day of the week you're trading in. Come Tuesday, it will not be worth this. Why? Because our theta is 70 cents. So we're going to see 7, 14, 21, 210, to call it 250. You're going to see 250 drop off that price come Tuesday morning. Ish. But big fan for Nvidia. I prefer the pullback to that 611 and the bounce, or the breakout of the 648.57 is probably the best way to do it. Let's see here. Let's do this first. So if we grab a pen, in an ideal world, this is how it closes today. Monday, it comes back, tests and bounce, and you take the trade right there on the bounce. All right? If it closes up really big, I need to pull back and probably close near this and then bounce to take the trade. But I like it a lot. Could not be more happy than with Nvidia as a company. So Voodoo said, Rob taught an iron condor strategy on the rut about a month ago. It's awesome income producer. Oh yeah, right, Voodoo? I mean, Michael, we crush it on that strategy. I like that one very much. You have about a 6 or 8% chance of being wrong on the trade. That's it. You're going to be wrong. You're going to have trades go against you. It's going to cost you on some of your trades. But 6 to 8% chance of being wrong on the trade. Very simple set of rules. Go back and watch the show from there. Yeah, I remember the vertical spread on both sides. 50 cents both legs. Correct, Brad. That's exactly it. Yep. AMD. Let's go take a look at, I'm just moving so fast. AMD, that was Falcon. All right. Need a bigger picture. Oh, kind of ugly. Look left. What do you see? Overall bearish pattern. We did get above our highest moving average. We're in a bullish bias, but we're not true bull, meaning moving averages are not in the right order, but we are in a bullish order. Pull back to the 79 and a bounce would be my potential for taking the entry. I could probably get away with a wick stretching down near it and bouncing, but I don't want to take the trade from here. Breakouts tend to fail in many cases. Look at the breakout here. We broke out to the downside. We came back. We broke out down. We came back again and again and again before we bounced. All right. This type of breakout here, where you retest and fail, that's the breakout we want. We broke out, retest, bounce. That's what I'd like to see happen here. Right, but not enough movement on the diamonds. I'm not a fan of it. UPST, Carlos is asking for. UPST. Let me get a bigger. All right, so newer company, Upstart Holdings. All right. Newer company near all-time highs. All right. Let's do it this way. Bring this in a little bit. Nope, I don't need that big. Small, bigger. Okay, there we go. Watch. And scrunch this down. Either pull back to the 8 moving average and bounce. Take the trade there. Or close above the 165.66, retest and bounce. Take the trade there. Right? If we come back to the moving average and bounce, our target's going to be right about 164.5. If we break out above the 165.5, we're looking at a target about 197 to the upside. On this UPST, let's go look at what the options look like. Upst. Woo! Expensive. Expensive options. All right, so they only have monthlies. So we're going to go out here with this 49 days. We're looking at a 67 delta, which is 2540 by 2870. Holy mackerel. $3.30 bid-ask spread. You have to ask yourself, are you willing to be $330 underwater when you hit enter? Because that's what you are on that type of trade. And you can negotiate a little bit, but that's a lot of negotiating. I'd rather go with a booking as far as the negotiating goes. So Bucksy said, Rob, what is your usual daily setup? Covered calls, puts, or regular calls, puts? So Bucksy, usually on a Monday morning is when I'm doing all my covered positions. I do all my analysis over the weekend, and I look for Monday morning for covered calls, naked puts, diagonal spreads. That's my normal Monday. Lots of volatility in Monday morning. This tracking sheet that I have that I fill out every single day, I'll look for the 2 or 3 or 5 companies on there for today, right? Otherwise, then from that, my covered positions come first on a Monday. After that, every day is spent right at the open in the market looking for day trades and swing trades based on the rules that I call out to my students in the training that we do. And guys, listen, I do a free training twice a week, at least twice a week. It's called Trade with Rob. Can you guys drop the link in there? There it is. You guys just had it up there. Perfect. I appreciate it. tradewithrob.com/go. Guys, go to that page. And what I do basically is I do a video that's 3 to 5 minutes long. And in that video, I tell you, here's the position we're looking at. Here's what has to happen for you to take the trade. If it happens and it takes the trade, 1, if you are right, here's your first and second target. If it goes against you, here's your stop in the trade. And here's how to make adjustments to your stop if it moves in your direction instead of leaving the stop at the original stop. It is called tradewithrob.com/go, right? I don't put a trade out unless I think it's a good trade. Period. It's not, we're doing a trade every day we're going to do. Nope. We're going to do every day the right trade setup presents itself. Right? So check it out. There's no cost. There's no anything to it. It's free. Completely and totally free. Has anybody here taken advantage of that already? I know Voodoo has. Thanks, Bugsy. I appreciate it. Yes, Tony, the rut is the Russell 2000. UPST hard to trade. Exactly, Hurt Scrambler. It's not one that I'm liking the way it looks. Yeah, so look, WebCoin, Brian. I mean, guys, take advantage of it. I subscribe to several of your services. There you go, Brad. Excellent. Good. Good. I mean, listen, free, right? I'm going to teach you. I want to teach you how to take the trades, and that's what this does. It shows you how to take the trades, right? We're actually going to do a training on, that. Just for that, we're going to do a training on that one particular setup I do, which is called the zero line breakout. We're going to do a training on that where we can answer some questions on the specific setups that we do in there, right? And then I'll record that and we'll put it on the same area where the members area where you guys see the videos, and we'll put that in there that you guys can check that out. It's going to be pretty cool. I'm really looking forward to it. Can you please repeat your site you just mentioned? Sure. Let me do it this way. I even went as far today as writing it down. How about that? Talk about being proactive. All right. Yeah, it's rolling across the screen right there in the gold bar. All right. Let's see. Yeah, guys, I don't remember the date. You're going to have to go back and look. But every couple of weeks, we'll do something on Iron Condor right about the time that I need to go ahead and write new Iron Condors. Brian said, I'm just learning now. I understand how to get into trades, but need help on how to get out of verticals and condors. Okay. Just signed up for the alerts, Blaze said. There you go. So Falcon, that'll be the last one I look at, which would be Facebook, which is one of them that I put in the text box for these guys today. I just have not had a chance to get to it. Facebook. That's my little old Italian mother-in-law. Facebook. All right. I love it. We broke above the 328 level. I needed to pull back to the 328 and a bounce. If it does, I'm looking at 337 as resistance. So somewhere down below there is my first target, and 346 is my next resistance. So somewhere down below there is my second target. My stop is going to be down below that 328.25 level. Right? Probably down below the moving average, maybe 324 is where my stop's going to be. Right? I'll do either 4 contracts or 10 contracts. It depends the trade setup. If it grades an A, a B, or a C. An A gets 10 contracts, a B or a C gets 4. And if I did 4 contracts, I would sell half of them at the just under 337, the other half at that 346, just under 346. All right. Yeah, smash the like button. There you go. Appreciate that, Ronnie. You're an awesome teacher on different options. No BS. That's it, Ronnie. That's me. Guys, I am here to teach. I am here to teach you. But I'm only here for an hour a week. We do a bunch of training on our own website, which is wealthbuildershq.com. Go ahead and check that out. There's free training we do every Monday at noon, live. It's all candidates is really what that comes down to, strategy and candidates, right? Excellent. Fantastico. Spencer, you in the back there, or who's got me today?
I'm with you here.
Oh,
good job as always.
Appreciate it.
Rob Roy, and as he said, just to reiterate, the time slot is going to move. So there's no show next week because we got our Cannabis Capital Conference. Starting the week after, Rob will be on the stream Thursdays at 9:25. Thursdays, basically right after pre-market prep ends, Rob's going to hop on and not trade the open, but walk through setups at the open, 9:25 till about 10:25. Thursdays, beginning the week. What's the date? The week of June 7th. So June 10th is going to be that first
June
day.
10th, right.
So Rob, I will see you in 2 weeks. Have a good, long Memorial Day weekend, and good luck in your trades.
Appreciate it. Thanks, guys. Take care, folks. See you soon.
Good job as always. And again, the link is up on the screen. Oh, there he's gone. The link is up on the screen. WealthbuildersHQ, also tradewithrob.com. Those are Rob's two sites. So always thanks to Rob. He really is a great teacher. He's no BS. He's not a charlatan. He's not talking about. He hates those high flying stocks. He's talking about real stocks and real strategies, and I like it. All right, it is 3:01. It is time for Zinger Stock Trivia. Guys, are you ready? They didn't even answer me. So, all right, doesn't matter. I'm going to hop off here. I'm going to end the stream. That stream will start or it won't. I don't know. We're going to find out. I'm ending the stream, guys. Actually, let's throw some music on. I'll give them a minute, and then I'll end the stream, and then we'll go into some trivia. So, thanks, everyone, for watching. Smash the like, subscribe, and I'll see you on for the At the Close show in a half hour.